Why risk management is crucial in Forex trading. Forex trading is inherently risky, and without effective risk management, losses can quickly accumulate. Proper risk management not only safeguards your capital but also enhances your chances of long-term success. In this video, we'll break down essential Forex risk management principles and provide practical tools to help you navigate the market with confidence. Essential risk management strategies. Set stop-loss orders. A stop-loss order automatically limits your potential losses on a trade, protecting your capital from significant downturns. Determine your risk tolerance. Identify how much risk you're comfortable with and stick to it. Decide the maximum percentage of your trading account you're willing to risk on each trade. Use leverage carefully. Leverage can boost profits but also magnifies losses. Use it responsibly and only if you fully understand its impact on your trading account. Managing position size effectively. Calculate position size. Determine the right amount of capital to allocate to each trade based on your risk tolerance and stop-loss levels. Utilize risk management tools. Take advantage of position size calculators and margin requirements offered by most trading platforms. Avoid overtrading. Stay disciplined and don't exceed your risk limits, even when tempted to chase losses or capitalize on market trends. The psychological aspect of risk management. Emotional discipline. Trading can be emotionally challenging. Mastering emotional discipline helps you avoid impulsive decisions. Create a trading plan. A well-structured trading plan promotes consistency in discipline, minimizing emotional trading. Accept losses as part of trading. Losses are inevitable in Forex. View them as learning experiences and don't let them derail your strategy. Combine multiple risk management techniques. Use a combination of strategies for comprehensive risk protection. Review and adjust regularly. Market dynamics are constantly changing. Reassess and update your risk management approach as needed. Commit to continuous learning. Keep yourself informed about the latest risk management techniques and refine your strategy over time. By mastering these risk management principles, you can trade more confidently and improve your chances of long-term success in the Forex market.